Hey Bulls and Bears, how are we doing? It is Saturday. Thank you for joining in. We've got a lot to talk about today. Very interesting week and some really interesting and important weeks ahead. And we're headed into a time of year now where things typically get very chaotic. If we look at most of the market crashes, the bank failures, the economic collapses that have occurred, or the crises that have occurred, we see these in the fourth quarter of the year. Typically, we're talking about October, November, December. Here we are now past the midpoint in September. And we also had calls of major happenings, major events to occur this month in September between the 20th and the 25th. And we even had some major names come out and talk about major market collapses that are going to be coming up here. Corrections, I should say. And we'll see. It's a few days to play out. This thing, when I say thing, I'm talking about the markets, the economy and the markets together. Sometimes they can move separate. Sometimes they move together. Most of the time, no, when you see turmoil in the markets, it affects the economy as a whole, because this whole economy is propped up on money printing and keeping these markets inflated, keeping the bubbles inflated, the housing market, the stock market. It's all interconnected. And yes, the stock market isn't the economy, but it's still very important, and you have to tie it in with the economy. A lot of people have most of their wealth tied up in the stock market. Imagine being right before retirement and you see a stock market crash within maybe a year, even months before you retire. How devastating would that be? And all of a sudden now you're down 50% of what you thought you could live on. And we're seeing more people now taking money out of retirement accounts, out of their savings, out of their 401k, to try to keep up with the rising cost of living. Now, we also have a lot of people out there thinking and hoping, and they may be right, but they're hoping that the housing market's going to crash, that all the houses are going to be half price next year, and the cost of living is going to be so much easier because home prices are going to be cheaper. In the meantime, over the last month that we have data for, we see less than a 1% drop nationally in home prices. Now, if you look at some overpriced cities, it's higher. Some cities have fallen 3, 4, 5%. But still, nationally, when you look at the overall average, some cities are still going up, actually. But if you look at the average, it's less than 1% that we've seen as far as the drop month to month. All right, so we'll see how that plays out. People are expecting things to get easier. Other people are saying, hey, be careful. That would be me. Be careful, because the inflationary forces are still there. Remember, back in 2008, the financial crisis, the housing bubble, when it went bust, banks, at first, they did not know that they were going to be bailed out. There was that period of uncertainty. But since then, now banks have been promised unlimited bailouts. They've been promised that these entities are too big to fail. All right, there's also been talks and fears of bank runs. The thought or the fear that banks are just going to take everybody's money and use that in case there's a bunch of loans that go bad, in case there's another default tsunami like the one we saw in 2008. You have to look deeper. We now have a zero reserve requirement for the banks, the fractional reserve banking system. It used to be that the banks had to keep a certain amount of funds in the bank in order to loan out money, to make loans. Now they don't have to have that. It's a zero reserve requirement. So look at the differences between now and 2008. People say, oh, it's going to crash just like it did before. I hope they're right. I hope it does. But look at all the differences. We have now no reserves required for the bank. That's completely different than 2008. We now have unlimited bailouts that have been promised to the banks. The banks will not be allowed to fail. That's not me saying that. It's the Fed. They came out and said that, basically, that they're going to provide unlimited support, whatever it takes, for the banks to remain operational, to remain functional. Right now, with the cost of living, of course, we look at housing, we look at rents, we look at real estate prices, but we also have to look at food, energy, all the things that most people use here. Let's talk about food. There are talks about a rice shortage. This is pretty scary, folks. Let's go to an article. Just like we're seeing here in California with the mega drought, China also seeing a drought. Now we're talking about a shortage of rice, a possible shortage of rice. Lawmaker warns of rice shortage amid China drought. Folks, this is scary to me because my side dish or side order with Panda Express is always rice. I don't want to get the noodles. So I'm very scared. I'm shaking right now. Can you see me? I'm shaking. There's a possibility of a rice shortage, I begin to panic. From this article, quote, we have a 30-day window before the dry cropping season starts. Crucial 30 days for action. Calling on the Department of Agriculture for heavy support on rice crop dry season and secure contracts on imports to guarantee rice supply. And it always comes back to this, what can we grow here and what can't we grow here? All right, rice, not easy to grow here in the U.S. We do import rice, and it's like that. Some things we have to import, but we have outsourced so many jobs out of the USA of things that we can do here. We can manufacture automobiles here. We can grow our own food here. Why do we have to import so much food? We can do so much of what we actually import. So much of what we have outsourced, we can actually do here. The cost of living is the difference. Companies are looking at their bottom line. They're looking at profits. They're going to send the jobs to where it is cheapest, and the labor is cheapest in countries where the cost of living is lower. And that's the bottom line. So that's another danger of the high cost of living that I think most people just aren't talking about. So when you see all this money printing, this QE to infinity, all this market propping to try to keep prices inflated, we have to tie that in with the big picture. All right, let's go to another article here. Kevin Leary. Might be a good time to buy stocks, according to Kevin Leary, the guy in Shark Tank. Take opportunities on days like today, Kevin O'Leary says. It could be the best time to buy stocks. There's a couple attractive stocks. Let me know down in comments, is he correct? Is he trying to lure people into this market? But at the same time, the market's manipulated, right? They could click of the mouse. They could take this market up to new all-time highs. Click of the mouse, they could crash it if they pulled back all of the support, all the monetary stimulus, all the QE, all the propping, all of the plunge protection. And think about this also, very important. Companies and banks included, they're selling off their debt. They're selling off their loans. They're selling off their debt into the debt markets. They're monetizing the debt. So then they have more money to buy back their own stock. Stock buybacks are still happening. Legendary investor Stanley Druckenmiller warns there's a high probability the stock market will be flat for an entire decade. So another example of a multi-billionaire investor that still doesn't know. You would think the billionaires are smart enough to know, right? They became billionaires, so they're smart. So why can't they tell us what's going to happen? So even somebody like Stanley Druckenmiller is using words like there's a high probability. And why do they have to do that? Because nobody knows, because it's manipulated, because it could be changed at the click of a mouse. Next, still on the topic of high cost of living, it is rents. Rents are still going up. Now, if we look at previous years, now here's this year, 2022 here in the purple. Previous years, we see rents usually peak around summer. We see July, August, and in all previous years, it's peaked and then started to go down. As of the most recent reporting here, we have the numbers for August, and we see that rents are still on the uptick. They're still in the uptick. So no drop or no crash in rents as some people had predicted. Now there's this perception out there that investors are going to be dumping properties because they only get a 4 or 5% return on rents, and now they can get that in treasuries or other types of investments, so that there's a perception that investors and people that own portfolios of properties, including mega hedge funds and mega investors, that they're going to be dumping thousands and tens of thousands of properties onto the market, and that the housing market's going to crash. Will they do that to try to get a bigger return? Or will they hold on to these houses and just raise the rents to get their return? You see what I'm getting at here? So people have their back against the wall. People have to pay the rent. And that's the problem with renting. You're at the mercy of the landlord. All right, so it's not good, and home ownership is not always a good option for people as well, because those costs can be even much higher than renting, especially when you look at the cost of maintenance, the upkeep of the residence, the taxes, all the other costs that go with home ownership. So very dangerous times, folks. I don't think we're going to see any get out of jail cards here with the cost of living. You may see some deflation in some areas. The cost of automobiles, we reported just a few, maybe just a week ago, week and a half, that the cost of automobiles has come down slightly, less than a 5% correction or decrease in the cost of cars and trucks. Rents still not coming down. Home prices not coming down very rapidly. Not enough to really save people that are in a bad financial spot right now. And we see the cost of energy, utility bills, food lines exploding, the cost of everything, mostly, for the most part, the costs are still rising. right? So a lot of people are looking to invest during these times because they need to keep up with the rising cost of living. They need to get a bigger return, and we still get a fraction of a percent if you keep your money in the savings account, and not a good place to be. So we're looking for investments, and people are deciding where is the best place to be. Please let me know down in the comments, where are you investing, or are you just holding cash waiting for a price correction or a crash in the markets to buy a home, to buy a car? What is it? A car is not an investment. It is. I mean, especially when prices are rising. People have bought cars in order to resell them later down the road because of these supply chain issues, the chip shortage. But typically cars are not an investment. Typically they're a depreciating asset, but now they're appreciating. Except for the last few months, they're depreciating slightly. So we're going to stay on top of the latest news for you. Cost of living, prices, cars, homes, you name it, the monetary policy. The Fed's talking about another rate hike. It's going to be 0.75% here at the next meeting. There's going to be a couple more meetings before the end of the year. We could see a Fed funds rate up around 4% before this is over, and that's going to mean more turmoil in some markets, and we're going to keep an eye on it for you. Please make sure you like, subscribe to help this channel out. Thanks everybody for being here. Appreciate your support. Talk to everybody very, very soon. Bye for now. Peace.